it's like a 500-pound person. No, we're not talking about Augustus Carson's.
Don't lie to us. We all know who ate all the money. August, dein Schwoll, who ate all the money. We know who ate it, Tim. It's that's actually what absorbed the inflation in the monetary system was Augustus Carstens.
Everyone, this is Tim Picciott with the Liberty Advisor, joined with John Snice and Economic Truth. We are back for another Tim and John show. And right now, what is front and center for me, more so than anything, and I'm calling this a perfect storm, is Brewing Part 2. Part 1 was back in May of 2018. And if people can remember back then, I'm trying to remember back then, basically the Fed was setting up to, by October of 2018, to start selling $50 billion of bonds off their balance sheet. They eventually said they'd get their balance sheet down to zero. Everyone that listens to this knows they're full of crap. And of course, John knows they're full of crap, and Josh knew they're full of crap. We all knew because we don't have Nobel Peace Prize in economics, which is exactly how we were able to figure out that there's no way they could do this. So come October of 2018, when they reached their peak of $50 billion a month, then the stock market started going crazy. And actually, I did a client video update October 3rd. And then it was October 4th that Jerome Powell said we're on autopilot and they're going to raise rates a quarter of a point every quarter. And Trump is still saying it's the greatest economy in the history of the world. And then, everything started going to hell in a handbasket. Then Steve Mnuchin had to come. But it was so obvious. And really anyone can go back to that podcast. Because the other thing was, I'm like, well, if we're going to be selling $50 billion of bonds a month, I'm like, well, that's interesting because who's the largest purchaser of bonds? Oh, well, that's the Federal Reserve. Oh, who's the second largest purchaser of bonds? Oh, that's on any given day, either China or Japan. And at the time, Trump was engaging in a trade war with China. So you think they're going to pick up the slack? And then Japan was, the most heavily indebted first world country there is. So not a very great position to be in. And I knew that supply and demand meant that the rates had to go up, and then that was going to create a shock in the stock market. And, from there, obviously, they had to, cut everything back and then eventually launch, another QE that wasn't QE. Then they had the whole repo interventions that John and I have talked about a bunch of times. I know he's got more goodies on that and what may have really caused that. And we'll probably eventually do like a full show on that. But for right now, we'll just, tease you guys with that. John will give, some more details later on in the show. But then obviously as soon as the pandemic happened and, the stock market went down, I think it was about like 34% on the S&P 500. Then we printed twice the amount of money that's ever, or not, we basically printed 80% of the money that's ever been in existence was in a 2-year time span. That essentially covered up everything. And that's why I went from like a 34% drop in the S&P to then all of a sudden, boom, hitting all-time record highs, all the risk assets and everything going through the moon, real estate, especially places like out here in Phoenix. I don't know exactly how much is up, but it's up a lot. I mean, it's up probably 30-40% off of, just the pandemic levels that it never went down for. And so if you take a look back at like Germany in 1910, I mean, I feel like, we're not too lots of similarities, I guess, with Germany and, show us the papers and all that sort of stuff. But if you take a look at like what's going on, and I'll let John speak at some point here, but it's just like setting all this stuff up.
There's the papers. Yeah. Oh, wait. No, this is the actual hyperinflation in Germany, by the way. I just had it right in front of me.
Yep, and I just happen to have the money gun up, but we gotta jam. No, the printing presses are jammed. We've printed too much money. Blew too much of our wad over the past 14 years, and now
you needed the ECB. You were the Fed. I was the ECB there, and then we gotta do some cooperation when it comes to monetary policy, or it shouldn't be called monetary policy, but just monetary printing. They don't physically print currency.
And that's actually a good point you brought up, because as soon as the Fed stopped printing money, and I think doing off the top of my head here, it was like October of 2014. Then all of a sudden the ECB started picking up, and the Bank of Japan started picking up massively. And it was a giant hot potato. And then the pandemic gave cover for all the central banks to basically rob the world. Somebody once said, if you want to rob a bank, buy a gun. And if you want to rob the world, buy a bank. And then, once you're at the central bank level, you're just dealing with a whole nother level of thefts and robbery. But, getting back to the story is that if we were in 1910 Germany, I think their stock market was like 400 and like it went down to like 100. And then, 10 years later, it's 27 million or 23. It's in the, very high level. hyperinflated level didn't mean you're doing great. It just meant that, that was trying to, somewhat keep up with the high amount of inflation. But if you're holding on to the cash at the time, the gold marks, you're wiped out, red marks wiped out, the Reichsmark wiped out, the Deutschmark eventually went over to the euro. Um, and so from a financial asset standpoint, things would go really crazy. But it's just right now, I thought that the 400 to the 100 was going to happen in March of 2020, if we're doing an analogy. And basically the 80% of all the money that's been printed staved that off for essentially like almost 2 years. And now we're going to be March 2022. And all of a sudden the Fed might even surprise people with a 50 basis point hike. Oh, big whoop-de fucking do.
Yeah.
50 basis points when we got a 7% interest rate. Like, are you guys kidding me? I mean, oh, we're going to get so fucking aggressive, and let me go pick Jerome Powell to go fix things out. And I did catch a little bit of Biden's press conference today. I didn't even know there was one happening or anything. Apparently no one else did, because like CNBC, there's like 2,000 people watching it live. And like I saw like ABC had one advertised, was like 900 people on YouTube watching it. And this is like halfway in it too, by the time I caught it. And so they were talking about the Federal Reserve like the second I clicked on it. And Biden's like, well, I'm confident that Jerome Powell has got a good handle on inflation. And I know that the best thing that, 19 or 17, whatever teen amount of Nobel Peace Prize winning economists have signed on to my plan, that the number one thing this country can do to get inflation under check is to pass Build Back Better.
Print more money.
Is to print more money we don't have to indebt our future fucking children is what we need to fight inflation. It's like these people, like, that is the dumbest thing I've ever heard. And I've heard a lot of really dumb stuff. So and that was like the second I happened to turn this thing on, I hear this bullshit. And so obviously these guys do not have a handle. The only way to get a handle on this is to rein in things and like raise rates to like 10% or something right now. And there's no way they're going to do that. Or
I
they
do a
could have started.
Volcker, try to pull a Volcker, but good luck. I don't think anybody's willing to do that in today's Federal
Well, Paul
Reserve. Like,
Volcker actually is dead now too. So rest in
yeah,
peace, Paul Volcker, who was actually, I
yeah.
hate saying good Federal Reserve chair, but in terms of
He was
like
a gold
the guy
bug,
that was,
actually. Like, as soon as he got out of the Fed, he was a huge gold bug. But nobody talks about that, of course. Actually, was cut out. I think it was at the Council of Foreign Relations, and that part about when he talks great about gold was actually cut out of the YouTube friendly version that they put
of
out,
course it
which
was. And
was kind of hilarious.
we've covered the CFR with Richard Grove, and
Yep.
invite people to go back to that episode. But the getting back to like the end of the story here is now what is different is that in those previous periods there was no stated, obviously there was inflation, but there was no stated official CPI inflation. And now that there's 7, what are they going to do? They're going to start raising rates. Well, the last time they raised, every time they tried to raise rates, since the financial crisis, they fucked everything up and everything's gone to hell in the handbasket. And I think this time that the inflation actually is out of control, like 300% higher than they want it, more than 300% higher than they want it, and they're just going to give it a few little rate hikes here and there. Well, the bubble is so big that you need a smaller pin to pop the bubble, and this could be, the event. But the thing is, it's only going to be like, if it, bring it back to that Germany example, like if we're in that 400, like maybe we did like the 400 down to 250, and that was March 2020, then things went back up to 500 or 600. Well, maybe now they go down to 100, and then they end up going, or maybe they're probably never going to make it down to 100 on a like, if we're doing like the analogy here, but it's going to go probably parabolic at some point, because the only thing they're going to do the next time they're in a crisis is going to be print more money, and we're going to have some sort of like hyper inflationary recession where there's no way you can't print your way out of an inflationary problem. And these guys just don't understand that. And so I think that the financial assets minus bonds, obviously, in cash, are going to get absolutely racked for a little bit of time. It will be good to be in like short-term bond, not giving financial advice on this, because you've got to understand like a whole multitude of information and timelines, and have a certain amount of wherewithal to be able to have a plan, stick with the plan, and do things. And so if you don't have that entire wherewithal and the whole background on this stuff, and you're just hearing what I'm saying and potentially piecing it together without having all the information, we do offer consultations, not to make a pitch out of this, but that I did want to give that story to paint the picture that this time is different. Check out the last podcast was only 15 minutes, and I'll let John talked, because there's no way the Fed can accomplish this. There's no way they can get out of this without having to, at some point, start printing money. And the only thing we should be discussing is like playing some guessing game on what the excuse or black swan will be, or playing a guessing game on the over under on if it's going to be within 6 months or not. Are they going to only bullshit us for 6 months starting from the first rate hike, or is it going to be a year? Let us know in the comments what you guys think. I mean, I personally, uh no way we make it a year, maybe make it 9 months, probably make it maybe 6 months. I would say like 6 to 7 months. And then it gets so bad that there's like a smallpox attack, or the grid somehow goes down, or there's the war, or probably the war with Russia and Ukraine is some exogenous event to then create all this. Maybe if it were, I guess I'm betting on two different things of what will be the event, and then, well, how long till the event. Because you see Biden, like, just the other day is like, oh yeah, it's pretty much inevitable. There's going to be war with Ukraine. We did talk about this a little bit, Scott Horton. But what do you think, John?
Well, I actually would rather bet on a smallpox attack than, or want that actually, a smallpox attack rather than having, a war with Russia, because we know where Putin stands on when it comes to war with Russia. Then also, like, what is not even mentioned, Tim, that is also another catalyst, and of course hyperinflations are very, when it comes to hyperinflations, they're very uh, what do you call it? They're very psychological. So, uh, when you look at an actual hyperinflation, there is a lot of things that has to come in place for that to really happen. Now, there's a lot of those different things that are happening right now, because in checking accounts in the United States, there was like 4 or 5 trillion dollars or something. Like, it just skyrocketed like 500% or something during COVID, because you had moratoriums on debt. A lot of people weren't paying their debts. You had a lot of helicopter money coming into the economy. And so it stayed in the checking accounts mostly, and hasn't really moved out of there yet. And you actually have physical inflation already, because you also had the helicopter drops, directly into people's bank accounts. So that actually causes somewhat inflation, because that money starts to then chase goods and services in the real economy. Now, if you look at this one here, this is M2 velocity. So this is how fast money changes hands. Now, unfortunately, I don't have the 30s, Tim, but I bet you the 30s, if you looked at a chart like this, it would probably be around like this here somewhere, like in 2014 to 2018. But take a look at, like, okay, so you had 2019 quarter 4, it was going worse and worse, because what happened was that all of this type of bailouts that were happening with quantitative easing, all that it does, it basically, they buy up basically an asset from the bank, then they give them a reserves at the central bank, and it just sits there doing nothing. So that is what have happened, and of course you had the massive quantitative easing, through March, like when it really blew up there in March, and then the balance sheet expanded drastically. Well, what we're seeing is just a massive drop here to velocity, and it was ended up all the way at 1.1, and then now it's almost down at that level again. Like, the economy kind of reopened again, and it barely went up. So what happened is that these central banks have basically done this quantitative easing on a worldwide scale, and the banks basically got fresh reserves at their central banks. It doesn't matter if it was the Federal Reserve or if it was any of the other central banks out there. They bought, all forms of assets. Some bought real estate, some bought stocks. There was, of course, bonds. There were mortgage-backed securities, which is, a derivative of all the, you're talking about housing, derivative of that. So they've been buying that up from banks that were basically bankrupt, and then they took them over, put that on their balance sheet, the central banks, and then they gave fresh reserves. Now, of course, that reserves would have, I think, would have happened with those reserves as well, Tim, is that has been leveraged as collateral potentially to, look at margin debt is, near $1 trillion right now in the stock market. I bet you it's not as high now as it was just a month ago, because of where the stock markets are at. Like, if you go and look at the stock markets right now, And this is actually, so this is actually before there's no tapering yet, guys. Like, they're tapering the quantitative easing right now. They're not actually selling assets at the Federal Reserve yet. And so you're seeing, just to
Yeah, they're
talk
still
about, and
buying.
yeah, they're still buying. And actually I could provide some information on that right here. And that they're still continuing to accumulate
Is that the cliff
debt.
that the is that a picture of the cliff the economy is going to be going off of in
Pretty
your
much,
background?
yeah. Yeah, it makes sense, because it's not even a cliff. Like, if there was a crater, I guess a cliff and a crater big enough would be Mount Everest right beside the Mariana Trench.
Yeah.
That'd be a cliff big enough that it would drop off of. But if you go here, we're gonna go down to purchases. As you can see, they're still buying. Here, I'm gonna pull away the submitted. And as you can see, they're still buying treasuries. They're still also buying mortgage-backed securities. And as you can see, they still continue to do it. Like, there's a few days that they haven't bought anything. As you can see, it goes down to zero. But there's no plan to stop this at all. Like, they continue to accumulate just on a slower scale right now. But as you can see here, here's the Fed's balance sheet. As you can see, it's been steady as we go. Ever since that massive intervention of quantitative easing. Went from 4.1 all the way up to the peak here. It was 7. So that's basically $3 trillion that was just inputted within a short period of time there, right after the stock market crash. And then you seen since that time, now we're up at 8.8, almost 9 trillion. So we're almost 2 trillion just within after that time. They had to push in another 2 trillion. So we're basically from the bottom here, Tim. When the repo market started blowing up, it's about 3.7. So we're up 5. What is that? That's 5. Yeah, it's $5 trillion. They're up on their balance sheet, and it's not going to stop. Like, they continue to accumulate right now, and so is the ECB, is even worse than the Federal Reserve right now in buying assets. So this is not going to stop. But, like, when they stop though, and the thing is, like, they were tapering. They were physically tapering when the stock market started to struggle last time. But this time, they're not actually tapering in the way that we believe. Like, they use the language and trying to convince people that they're tapering, but they're tapering the asset purchases. So there's just less and less asset purchases. So they're still going on. So it's to me, it's pretty hilarious. How these Nobel winning PhDs over there at the Federal Reserve, how they're really doing very well at destroying the whole financial system. Now they're talking at the World Economic Forum is like, COVID really, like, we have the Davos going on this week, right? And they were talking about, we really had the COVID-19 was really a pandemic of inequality. It's like, meanwhile, it's like, you bailed out the banksters. So I guess that's inequality. It makes sense, but it wasn't COVID. It was the Federal Reserve and other central banks and the governments bailing out the ultra wealthy. that's what it was.
And one bank, and actually this bank is called One Bank. One bank predicts 3 trillion in quantitative tightening coming. Enter Deutsche Bank, which forecasts that once QT begins, the Fed's balance sheet will shrink from 9 trillion currently to 6 trillion. And actually, then this guy then goes on to say that basically that's all going to be reversed at some point when they've got to basically start printing more money. But they think that the peak would just under 9 trillion after QE completes in March before falling back to eventually approach 20% of GDP from over 35% today, and around a third smaller than this peak, at which point will be around $6 trillion. And of course, this is all purely theoretical, even as Reed notes. His personal view is that the balance sheet will have to grow substantially again in the years ahead as the authorities are forced to use financial repression in order to make the growing public debt burden sustainable. We agree with this 100%. The only question is what crisis will catalyze The next explosion of the Fed's balance sheet. Even so, the Fed is increasingly trapped because while it may have no choice but to pivot dovish soon, in 2018, the Fed had the luxury of dovish pivot as inflation trended back down towards 2% and below. And so the thing that's different now is that inflation is 7%. And so there's really, what other tool that they have? I mean, the one tool that they have is basically a 12-gauge shotgun to the face of the economy, and they're going to end up killing it. I mean, so it's just absolutely crazy to think that, that they can just lie about this. And
yeah, the thing, Tim, is like they made it only 700 billion from the peak. Like it was 4.4, made it to 3.7 within. And what is that time frame? That's like let's see here, 2014 to 2019, basically, when the repo market blew up. So yeah, it's like
I gave the example before that it was like
billion.
it's like a 500-pound person that lost 10 pounds and then ended up getting to be like 600 pounds. And people are like,
Yeah.
oh, well, the 600-pound guy. No, we're not talking about Augustus Carson's, but the 600-pound guy, that's a real inside nerd dork.
We all know who ate all the money. Don't lie to us. August, dein Schwoll. Who ate all the money? We know who ate it, Tim. It's that's actually what absorbed the inflation in the monetary system was Augustus Carstens.
So for those who don't know, Augustus Carson's is the head of the general manager at the Bank of International Settlements. And I think our audience, will kind of know who this guy is. But here's just a little picture of him. I don't know if there's any little picture of him, but here's a picture of him. And
he's pretty small there.
Yeah, for his Wikipedia page. So
this is good picture. The one that he puts on Plenty of Fish or some kind of dating site. When he goes on it.
Yeah, the guy is like freaking like Jabba the Hutt or something. Actually, the very first thing it says, would you buy a dieting regime from this man? And it was about Augustus. Oh my God. Hold on.
Oh no.
This is good.
Would you find him?
Look at this beauty right here.
Yeah.
like it looks like a walking Big Mac. Like you just, robbed a McDonald's or something.
I told you, no, he ate all the money, Tim. Come on. Yeah, he didn't eat too many Big Macs.
Now we weren't planning on, talking about. I don't know how we got into Augustus Carson's now.
Yeah, but, we shouldn't be fat shaming, Tim. It was more like inflation shaming that we did right now.
Yeah, that guy has a better shot at telling you how to do a fucking Ironman triathlon and how to diet than he does turning this shit around. You know what? Maybe that's the best analogy right on the spot without even thinking of anything. Like I would trust that guy's dieting advice rather than trying to trust him being able to maneuver the way out of the situation. And let's also not forget that back in July, this fat fuck was telling people that, we need to have central bank digital currencies because we want to have the ability to cut you off. And we wanted the ability to block transactions. So you know what? I'm not fat shaming that. I'm being an Italian New Yorker, I'm gonna go after the jugular as hard as I possibly can when I've got some fat piece of shit that's over here trying to enslave humanity that's looking like he's Jabba the Hutt at 400 pounds. So you know what? How about he can look down and actually see you're drunk? Then he can start trying to rule the world, and you can't even rule your own self. God damn it! I shouldn't even be. That guy just pisses me off so much. It's not even funny.
But nobody knows about him, unless you actually.
We were talking about going for. I know how we got to him. We were talking about the joke was that I mentioned before is like someone who's 500 pounds losing 10 pounds and then being 600 pounds. That's how we got to Augustus Carstens.
Well, basically Augustus Carstens is he basically is showing what is happening to the monetary system. It's inflating, and as you saw in his old picture, he's been inflating with the monetary system and with the policies that he has actually been on the forefront promoting.
And it would be like if we were warning when he was 500 pounds that we're like, oh my God, this fat fuck is gonna die. Like he really needs to watch his intake. Somebody get him away from the McDonald's. And then all of a sudden he's 600 pounds and everyone's like, oh, don't worry. Last time I checked, Augustus Carson's having the time of his life, eating everything in sight, looking like a big fucking black hole.
Well, it's like that my 600-pound life, but just. But
it'd be like if people were judging the health of the economy on how big he is, like, oh look, the economy's never been bigger. Oh well, he's never been fucking bigger either. I don't know. Maybe he was fat. Maybe he was 1,000. The thing is, we're not stopping at 600 pounds. Now they're saying they're gonna go from 600 pounds down to You know what? It's really not. That really isn't the analogy. It's like we went from 500 pounds to 900 pounds, and now they're gonna go down to 700 pounds. But then they're gonna have a fucking heart attack and somehow end up at like 1,200 pounds, and then the patient's gonna be dead, and then we're all gonna be flatlined. I'm talking, metaphorically here, and the economy in terms of what's going to happen to the monetary system is going to go through the roof. And yeah, I'm using these crude type of examples that were not planned, as I have no notes in front of me, to only illustrate that this little example is going to be a walk in the fucking park compared to what's coming down the road when the whole monetary system blows up. And I'm not advocating any violence. And I actually, speak of advocating violence to people that weren't, actually, I know two of the people who are, I know at least one of the guys who just got charged. I shouldn't laugh here. Who got charged with seditious conspiracy? It's actually like a local guy who goes to, a lot of different like freedom events. And I mean, I definitely, he was a big fixture in the Ron Paul type crowd. That's a whole nother story about how they're trying to railroad Ed Vallejo, like this, 63-year-old guy that, walks like a 63-year-old guy that, he was going to lead some sort of revolution. I mean, he was there probably in case like Antifa or the FBI or the government were going to, mow down a bunch of Trump supporters or something, and then maybe having some sort of response. But he didn't even do anything with any weapons when, or even was at the protest when all the January 6th, insurrection was going down. And if he was planning an insurrection, uh, I know him. Like, I didn't get an invite. Like, no one I know got an invite to any insurrection. So it's kind of funny. Not that, I mean, it's funny from the aspect that, like, obviously it wasn't. And I mean, I was telling, some of the people that were going there, like, it's a big waste of time. And, Trump is part of the problem. And you guys are just like looking to replace like one puppet master with another puppet master. And they're not really an insurrection because like they don't want to overthrow the government. They want to like literally keep the government. Like they literally want to keep the current government. It's like the opposite of, overthrowing a government. And so, and I had no idea that I was talking about that. No idea I was talking about Augustus Carson's. I'll probably do a whole video on that later on. But we got people like Jamie Dimon forecasting.
Well, actually, we will do a whole video on him because he's a part of the Financial Stability Board. He's, the BIS is the bank supervisory arm of the Financial Stability Board. So we'll get deep into that, and I'm working on a presentation on that in the very near future.
Yep. And I do, apologize for, I guess going off on like on a rant there, but it's when you can see this stuff coming and we've been warning about it for so long, and like, okay, we could have voted for Ron Paul in 2008 or 2012, or and then stuff still would have been hard. It still would have been a bad band-aid rip off. But now we've blown the bubble up so big. We've gotten to 1,100-pound patient over here. And there's no way that the patient can get back down to 180 pounds and start running marathons because the patient is dead, overdosed, and they're going to basically collapse everything.
They can't
have the powers that be buy back for pennies on the dollar and then rent it back to everybody as we're all homeless on the continent our forefathers conquered. Like Benjamin Franklin theorized, if you ever allow private central banks to issue the currency and credit of a nation, first by inflation, then by deflation, you're basically going to mess everything up. Obviously, that was without notes.
Well, it was like this video that I saw of this fat kid that was really angry at the unvaxxed people. He said that you guys are taking up hospital spots because my dad had been 7 times in the hospital getting different bypasses. It's that same type of mentality, right? Where the economy is so unhealthy because you basically stuffed it full of carbohydrates and no good carbs, right? Like it's the worst kind of preservatives that you could find on the market. It's like a 0 point like a 10-cent noodle or something. You ate 500 pounds of that, and it's not going to be good for your body because it's full of toxins on top of it. Like they're also doing this Monterey-ing, but then there's more and more toxins building up in your body system, right? Because you're eating crap and it's full of these toxic things from pesticides and so on. And it's the same in the financial markets. You keep on inflating the financial markets, it gets more and more of these toxic entities and credit derivatives that you have out there. like mortgage-backed securities, like collateralized debt obligations, like collateralized loan obligations, like collateralized loan commercial real estate obligations, like asset-backed securities, like credit default swaps, and all these types of derivatives. Like what was another one that contracts for differences that blew up a hedge fund there. So it's all of these different toxic things that are building up in your liver and everywhere in the whole monetary system. And of course, that brings us back to probably, as Tim said, we're going to do a big video on it. But there was potentially something that happened before the September 17th repo massacre, where interest rates in between banks and lending banks jumped up.
The real insurrection by the
Yeah, the
bankers.
real insurrection. And so what happened potentially, and we're going to do a big video on this, also going into deep detail on what happened during the repo crisis, who got bailed out and how much and so on. And it wasn't, like these small banks. It was actually all the big boys that got bailed out, all the top, most important banks. But
we're not talking about Augustus Carstens. You said big boys. I just want to.
Yeah, well, it's actually Jamie Dimon. It's not very big. I'm surprised. That Jamie isn't a bigger boy over there. He must have.
I do want to play. I was gonna go to. Okay.
Oh yeah. So, sorry. Let me just finish this, and then you could you just get right into what you want to show there. But this is potentially what could have happened, and I'm going to do a lot more research on it. But there's a word that will come out, and this was actually, it's a look at the date on this. It was published on the 23rd. Thomas Cook liquidation wipes out travel company worth 1.8 billion pounds just 18 months ago, and it was actually $2.3 billion sorry, $2.3 billion. But what it was actually bets. So how this works is that, let's say that your house is insured, right? Like you go and insure your house for fire or flood or whatever it is. But the thing is, a credit default swap, which is, actually it was the Blake Masters that came up with the credit default swap, Tim. And the reason why they called it a credit default swap and not credit default insurance is so they didn't get legislated under insurance, which is very strict when it comes to the Securities and Exchange Commission. So she actually created that whole thing in the 80s. I think it was 89 or something, or 86, that Blake Masters came up with the master plan of these credit default swaps. But what it is, it's basically 1,000 people putting a insurance on your house, and then it burns down, and 1,000 people has to get paid. So that's what this potentially was, a $2.3 billion bet that was sitting there on it. It was like the bet against the credit default, collateralized debt obligations back in the 2008 crisis, where AIG blew up, or in the 2013 crisis, where there was credit default swaps on Greek debt that blew up in the Cypriot banks' faces. So it could potentially have been, and it looks like it was actually credit default swaps again, that also blew up. Like, it wasn't directly what blew up the 2008 crisis, but it was what, collapsed AIG, one of the biggest insurers at that time. And that seems to potentially would have happened again right before, the collapse and the repo crisis.
Yes. And, as we're talking about, the patient that's 1,100 pounds trying to get back down to weight, one of my favorite things, not my favorite things, one of my favorite quotes from CNBC is when they had the former Dallas Fed, I don't know if you know where I'm going with this, had the former Dallas Fed president, Richard Fisher, on, and they asked him, and this was, I think, in 2016 or maybe even before then. And they're basically talking about, ending QE and, what they're doing now to sustain things. And I'll give you his response because, it's absolutely, crazy that this was his response. But anyways, here we go. Hopefully you guys can hear this okay.
The power behind the stock market.
I think that power is running its course. I like to say that we injected cocaine and heroin into the system, and now we're maintaining our Ritalin. How's that?
Yeah, so they were injecting
pretty
heroin
similar
and
to the
cocaine
food
into the system, and it's like we basically skipped. That was 2016, pussy shit. Now we're like at fentanyl and like car bomb fentanyl and whatever. the kids have cooked up nowadays that might be even stronger than that. But it's basically like we've got like Chinese, heroin,
We
fentanyl,
got some kind of meth. I think we're on some kind of meth right now.
nanotech. I mean, no, I think fentanyl is even worse than meth. So
Yeah.
I mean, some of that stuff that's like super, super.
Well, actually,
potent.
Winnipeg is full of that crack, that stuff. And we actually had a guy that was high on it, and this brings another analogy. Sorry, me and Tim are all into the analogies today, but
And for
brings another analogy.
anyone that
Was it?
thought John could
Yeah.
go one show without mentioning Winnipeg, there we've lost that one too.
Yeah,
And
sorry.
we've said the SSP. I don't know if there's been any mention of Norway yet, but I don't want to take
I will see how I can tie it into this thing.
Manitoba.
But anyways, there was a guy that he basically hijacked a fire truck and drove all the way through the city and hit a whole bunch of cars with it and so on. And that's basically the people at the Federal Reserve, driving in the economy, trying to do something to centrally plan it. They're driving this fire truck into the traffic and just hitting everything around it, destroying assets and destroying, and also the government, right? Like they destroy the whole economy with COVID. It's like that crack addict that stole that fire truck and drove into a whole bunch of cars and destroyed everything.
Absolutely. And so, I mean, basically, at this point, there is no way for the Fed is going to be able to back their way out of this. There's pretty much no way at some point after they mess everything up that they aren't going to find some excuse to start printing money again. And so, this is a very tricky period because psychologically, a lot of people are going to want to basically, fold their hands, give up, move over to cash. And then the problem is when you're sitting in cash, and then all of a sudden you're going to experience hyperinflation. Then at that point, thanks for playing. And that's why, people are buying real goods. We're even seeing silver starting to go up recently. Obviously, Bitcoin is, correlated right now pretty highly to the stock market and is a risk asset. And so once this eventually reverses and it goes from the Fed having to basically, say uncle and end up, printing money again at some point, I'm guessing within, probably 6 months of stopping, maybe even less, then at that point, you're going to see the parabolic rise upwards. And this is something also I mentioned in a 2018 interview with I'm trying to think of the name, Free Talk Live with Ian Freeman. And I said, I'm here to basically document the ongoing financial collapse. And what I meant by that is, the Federal Reserve can only essentially save either, the combination of the dollar, the bond market, or stocks, and they really can't save all three. And so by trying to save the stock market, they're in essence going to basically kill the dollar and the bond market. And actually, right now there's an article that pretty much parroted exactly what I was saying, but 4 years later, and choose one, but only one: defend the billionaires bubble or the U.S. dollar and empire. And pretty much already gave you the short version of what that all means. Just kind of running through some of these other articles here. Lyle Brainerd, pick for Fed #2 spot, pledges to use powerful tool on inflation. We have a powerful tool, and we're going to use it.
He was just picked actually at the Financial Stability Board as well just recently. She's sitting at a top position there now as well.
Yeah, and here's here's a lovely titled article. If the Fed wanted to stop inflation, it would need to hike rates to nearly 6%, says the expert. And I don't think we need to really read too much more into that. And I 1,000% agree with that. I mean, what's this 50 basis point rate hike going to do?
No, it's going to do nothing. And see, like I think they're probably going to get to maybe 1% this time because there's so much debt around the world. Like how okay, so you get to raise interest rates to 6%. Okay, so let's say it's at 0.25 now. Like that amount of payments that you got to pay will bankrupt you, and you just got to have an insane deficit spending. Corporations will become more zombies, and it's not going to do any good. Like it's just going to be an insane. And then you're going to have the defaults, but then see, the thing is, it all comes back to what the Fed wants to do, and Bernanke clearly stated it in 2002 speech that he had, what the Fed's intentions are, and is that of never let deflation win, basically. And he said that, the printing presses will always beat the pressures of any deflationary pressure in the economy. So they're prepared to just do whatever it takes to keep that inflation going, because if you get deflation, everybody would fail. Like, there's so much debt right now in the world. Like, Canada is the number 5 in the world. Oh, Norway is number 3 in the world. And like, there's a lot of nations now over just privately 300% debt to GDP privately. That's not even adding the the debt itself from the governments, of course. So just the amount of insanity and debt leverage around the world now is just utterly insane. Like, there's never and it doesn't stop. Like, it just keeps on growing like crazy right now.
And the thing is, it has to keep growing the debt
Yeah.
in order to basically maintain the Ponzi scheme. And speaking of maintain the Ponzi scheme, this is from Goldman Sachs CEO. What's his name? Something Solomon. David Solomon. Greed outpacing fear in world markets, Goldman Sachs CEO says. And it goes on to say the unprecedented level of stimulus ordered by governments and central banks, he said, has led to exuberance in certain markets. I think markets generally, when I step back and I think about my 40-year career, there's been periods of time when greed has far outpaced fear. We were in one of those periods of time, Salmon's told the Singapore event. We were in one of those periods of time, and generally speaking, my experience says that, those periods are not long lived. Something will rebalance and it will bring a little bit more perspective and given it feels like inflation is running above trend. Yeah, like, say that again. Chances are interest rates will move up, and that will take. I mean, who is this guy? Chances are interest rates will move up. Yeah, they're fucking going up, and they're telling us they're going up. Like,
Oh, well, go and pull up the 10-year, Tim, when you have a chance. The
boom,
10-year
got a
US
chance
bond.
right there.
Yeah, look at
Let me
that.
just refresh it.
So it's not like where it was back in it's actually a 2-year. I think it's like a 2-year high right now, basically.
Yeah, I mean, a month ago it was
Yeah.
1.3.
Yeah, and it was basically right at the new year. You had a massive, actually, reverse repo position sitting at the Federal Reserve's 1.9 trillion, almost $2 trillion. It dropped down to 1.5 something, and then right after that, interest rates just started to skyrocket. Like, not if you go and look further back, they look like a tiny little blip still on the massive charts, but they're actually starting to move quite drastically upwards. Yeah, go ahead, Tim.
I mean, the last time we were in this position was in January of 2020, and so what they have to do after that, they had to have the craziest pandemic, bullshit. Everything that's going on now is a cover for the system. So I mean, I don't know how they're going. And I have said this numerous times. I say this a lot in my client videos that I do for them, is that essentially 3% in 2018, 2019, that was sort of like the danger zone. But now we've got so much more debt going on that essentially 2% is now what I'm now deeming the danger zone. And we're not very far away from the danger zone, are we, John?
We're getting there.
So
it's gone up a lot since you said that. I was waiting that it would take a little bit longer to get there, but it didn't take more than like a couple of weeks now, and it's gone up 0.5 basis points. No, sorry, 50 basis points. Yeah, 0.5. Yeah. So it's really showing that something is going on. Like, everybody's thinking that the Federal Reserve will start actually tapering at one point and start to raise interest rates. And I think they probably will, but the thing is, like, how far will they actually get? That's another question.
Did you? Oh my God. Here I am. I'm on Yahoo Finance, and there's like a Valentine's Day ad with two guys kissing in the background. I mean, I'm not like some homophobe or something, but like, can I even go to fucking Yahoo Finance without seeing two dudes kissing? I mean, you guys saw that too, like whoever.
Hey, it's the new normal, Tim.
Yeah, Fed chairman. We're gonna get canceled for that one. Oh, there goes YouTube. Can't talk about two dudes kissing on there. I mean, I'm trying to look at a Federal Reserve fucking quote on Yahoo Finance and can't get away from seeing two dudes kissing on here. Fed chairman, if we have to raise interest rates more over time, we will. Yeah, like that's gonna happen. Paul Tudor Jones warns of major shift that will have serious consequence for the markets. And, obviously talking about the rates going up and how the things that performed the best since March of 2020, in his words, that he thinks are going to be basically the things that end up doing the worst going forward. And that's, sort of like ARC innovation funds, pretty much to a T. Fed Chair Jerome Powell, inflation poses a major threat to the job market. And, these guys are completely clueless. I mean, there's, no way they can actually like raise rates to any meaningful, level without
What did
actually,
it make it to last time? To 2.25?
yeah.
And then up from what? I think was it 0.75 at the time, or I forgot where they went from, but it wasn't very far anyways.
Well, I mean, this story tells you exactly what's going on in the American economy. It's the economy. Average American worries about finances this many times a day. And saying a new study reveals that 3 in 10 people would give, well, actually, I thought I was reading something else, but it says this is even more shocking. 3 in 10 people would give up basically sex for the ability to retire today. So I wasn't even planning on talking about that. I was looking for, I think it was one of these things where I clicked on it, talking about real that 6 in 10 Americans agree that living through the pandemic has made younger generations smarter about the finances, blah, blah, blah. But it was something where I think it was like they worry about their finances 5 times a day. I think I clicked on an article that said something like that.
Well, I actually heard on the radio as well today here in Canada that I think it was like 50% has less than $200 in their account, and most people actually are. I think it was like as much as 70% were worrying about actually being able to might have to declare bankruptcy in the next like 2 to 5 years or something like that. So that's how bad it is here. And, and as I said, Canada's number 5 when it comes to most debt in the private sector. And then, of course, Canada's increased their GDP. I think their debt to GDP, the government now, because they doubled the government debt from 1 trillion up to now basically $2 trillion because of Trudeau's insane interventions. Yeah, it's just really worsening. And who lost the most? It was the pandemic of inequality. They're saying, we're at the World Economic Forum. Yeah, it's because of governments intervening, bailing out all the rich people together with the central banks. And we wonder, they gave a little bit of crumbs though, I guess you got some peasant, Timmy. You got direct deposits that you couldn't stop or something, right? You didn't take did you ever take any of those loans? I don't think you did, right? Or
I did. I mean, I ended up taking it was basically one of them ended up being free money. Another one was like 2% interest. But I mean, the thing is, like, if the money's going to be weaponized against me, it might as well take it out. And I mean, I did
buy
have
gold or something. Yeah, buy
yeah,
some
I mean,
good assets.
You can buy physical assets. I mean, and the thing is, I think we'll cut the normal financial part of the show now, and we'll probably get into some pandemic stuff that YouTube doesn't like. So if Zach, if you could basically cut this now, and for the other people listening to this or watching this on YouTube, which apparently I got my stats today and said I had no new subscribers last month, even though we somehow last month went from like 2,999 to 3,000. So thank you, 3,000 of you guys are out there, but you really need to be listening to us on we're just grateful that you're even listening to us. But if you are going to timandjohnshow.com, going to Odyssey, going to Picciott, going to Float, where I think it's posted on there, I know it's enemy platform too, but it's on things like iTunes and Castbox and all sorts of different places that you guys can listen to this as well. But anyways, that's going to do it for the regular portion. PG, not that was like super PG, but the stuff that maybe YouTube does not want us talking about, they tube them tube those tubes. But anyways, thank you guys so much. Now we're gonna jump over and catch us on those other spots, because